Do not buy a home until you have at least 20% to put down on a home. You may have heard this advice before, and not only is it wrong, but it is one of the worst advice to give out to home buyers. So first, let me welcome you to my channel. My name is LOR VANG. I am a real estate agent with eXp Realty in the greater Milwaukee real estate market. And I create video content on YouTube to help home buyers, sellers, and investors just like you. And in today's video, I'm going to discuss why one of the most common advice given to home buyers is actually one of the biggest myths out there. You may have heard from a lot of other people, even other professionals, that you should not buy a home until you have at least 20% to put down on it. And so in today's video, I'm going to dissect that for you so that you can make your own decision on whether you actually should follow that advice or not. So let's begin with why do people give out this advice in the first place? And it begins with a little something known as mortgage insurance premium, or PMI. And what is PMI? If you've never heard of it, it is essentially an insurance policy that the lender requires a borrower purchase. In this scenario where the borrower is putting down less than 20% down, the lender is going to require that the borrower pay for PMI. And this is on top of the borrower's monthly mortgage payment. So this is an extra insurance policy that the lender is requiring a borrower pay for to protect that lender's loan. In the scenario where you, the borrower, stop making payments and you default on that loan, the lender's loan is protected by this insurance policy. And keep in mind, I said protects the lender, not you, the borrower. So do not intentionally default on your loan. Okay, so just exactly how much can PMI add to my monthly mortgage payment? And so PMI can actually range from 0.58% to 1.86% of the loan amount. And exactly what percentage they charge you depends on the down payment percentage that you're putting down, as well as your debt to income ratio and your credit score. And so for a $300,000 loan amount, let's say it's 6% interest rate and you put down 5% for this loan, that monthly mortgage payment is going to be roughly $2,200 per month. And so because you put down less than 20%, you're going to get hit with that PMI. And so that PMI payment can be anywhere from $145 to $465 per month. So it could be, a little bit of difference to, it's going to be kind of significant, right? So wait, you're telling me if I bring 20% down, I can avoid the extra PMI payments on top of my monthly mortgage payment? So I don't get it. Where's the bad advice? Well, that's exactly it. If you have the 20% to put down. And let's face it, a lot of people probably don't. So, for example, if you're purchasing a $300,000 home, 20% is $60,000. And if you don't have that saved up already and you're starting from scratch, let's say you can save $1,000 a month. That's a pretty good rate for most people. And so that's $12,000 a year. That's going to be a 5-year period for you to save $60,000. But while you're saving that up, what do you think is going to happen to the value of that home that you initially wanted to buy at $300,000 5 years later? Is that home price going to stay the same? More than likely, it's not. It's going to go up in value. So what if by the time you have that $60K saved up, that home's value is now $360,000? Well, that means you got to bring another $12,000 to the table to get 20%. So as you can see, trying to save up for that 20% down payment could be a constantly moving target and a challenge for most to meet. Okay, so what are your options then if you don't want to wait until you have 20% down? Well, with a conventional loan, the typical minimum down payment percentage is 5%. And so let's assume again we're purchasing a $300,000 home. That would be a minimum down payment of $15,000. A lot more doable than that $60,000. And even if you were to save up from scratch at $1,000 a month, $15,000 could be saved up in a little over 1 year. Alternatively, there are actually 3% conventional loans out there as well. And non-conventional loans like FHA only have a minimum down payment of 3.5%. But be warned that FHA does carry a lifetime PMI with it. And then if you want to live in a more rural environment, you could potentially use a USDA loan for 0% down on a home. Or if you happen to be a veteran with VA loan eligibility, then you can also use a VA loan, and that gives you 0% down as well. In addition, depending on where you live, what state, what county, what municipality, there might actually be down payment assistance programs out there that can provide you with forgivable down payment assistance grants. And so in Milwaukee, I actually know of quite a few of these programs that buyers can actually stack. So you can stack grants together to essentially pay a huge chunk of that down payment, as well as cover some of your closing costs. And so if you are in the Milwaukee area and you want more information, you want to be connected to loan officers that can provide any of these loan programs or down payment assistance programs for you to discuss with and see if you qualify, feel free to reach out to me for more information on that. So now that you are aware of all the minimum down payment requirements out there depending on the loan program, as well as the down payment assistance programs out there, now the question comes back to, well, if you put down less than 20% and you get hit with that PMI when you purchase that home, is PMI that bad of a thing? So to find out, let's look at a couple different scenarios here. If, for example, let's say you do have some significant savings saved up already to purchase a home, but you don't quite have the full 20% to put down to avoid PMI. Well, what you could choose to do is ask your lender that you would like to pay the PMI as a one-time lump sum payment upfront at the time of purchase. And so this could actually end up being a little bit less money out of pocket than trying to save up for the full 20% down just to avoid PMI. And so what you accomplish by paying the PMI as a one-time lump sum payment upfront is that now your total monthly payment for your house is just your mortgage. And so it is, a little bit easier for you to pay because you've already taken the PMI payments off the table when you paid it upfront. So this is a strategy that you could consider if you have significant funds saved up, but not quite the full 20% to put down. Okay, so let's assume that you don't have the extra funds to make that lump sum to get rid of the PMI upfront. So what are your alternative solutions to getting rid of PMI? And so typically, if you used a conventional loan, when your loan to value ratio gets to 80-20, meaning that your loan amount is now 80% of your home's value, then PMI does drop off. Now, keep in mind, this only applies to conventional because FHA has PMI for the life of the loan. And so in the FHA scenario, you would actually have to refinance into a different type of loan to get rid of the PMI. And so that's an entirely different thing. But with a conventional loan, so your loan amount is now 80% of your home's value. So something to keep in mind, value, right? So that's not the price. That doesn't exactly mean the price that you bought your home at, because the value of your home, again, it increases over time. And so it doesn't mean that you've actually paid down 20% of your home's initial purchase price. You could benefit from appreciation of the market like we've been seeing the past couple of years here, homes have appreciated drastically, meaning that they have created additional equity just through the market value. And so you're not actually paying down your loan to get that 80-20 LTV. You're just benefiting from the equity that's being created. And so if the home value does happen to go up significantly, what you could do is you can have your agent, like me, run a comp on your home, run a CMA, comparative market analysis, and say, hey, what do you think my home's worth at right now? And if the value of your home has gone up significantly compared to your loan amount that you have, if you have that 80-20 LTV already, without you actually having to pay down that full 20%, well, now you can go to your lender and request that, hey, I would like to do an appraisal to try to get rid of my PMI. And if the appraisal comes in and shows that your home actually does have that 80-20 minimum LTV, then you can get rid of your PMI early. As a reminder, PMI is based on your loan amount. And so as you continue to make regular payments to decrease your loan balance, well, your PMI should also be decreased. But very important to keep in mind that the calculation does not happen every month. It happens on an annual basis. So that's when you should see your PMI payments go down. Also, something pretty cool that I came across last week in a conversation with a loan officer that I work with, and she mentioned to me that they are starting a new program where they are offering to pay for a buyer's PMI. And I thought, wow, that's pretty cool. I've never seen that before. But I did do some research, and you should be aware and to check if there's any additional fees for that, or perhaps they might do a trade-off of a slightly higher interest rate. So that might be something that you might be interested in looking into. So if you're in the Milwaukee area and you're interested in that, reach out to me and I'll connect you to my loan officer contact so you can discuss and see if that's right for you. Lastly, I believe for these reasons that you should try to buy a home as soon as you're financially capable, instead of waiting until you have the full 20% down. So number one, if you're currently renting, to buy a home means that you can stop paying someone else's mortgage and start paying for your own sooner. And if you're of the mindset to think that, oh, you know what, rates are too high for me right now, I'm gonna keep renting until rates come down and then I will go buy. Well, let me ask you this. What is the interest rate for rent? It's 100%. Once you're able to buy your own home, that allows you access to all the benefits of home ownership, such as building up equity, which translates to increasing your wealth and building up your net worth. In addition, you can take advantage of tax deductions. And now that you own real estate, you have a hedge against inflation because real estate increases with inflation, unlike cash, which decreases. And now you have accomplished the ultimate dream that many have, which is a place of their own. This is something that you can't put a value on, especially if you have a family. Can you imagine waiting 5-6 years until you have saved up 20% that you thought you needed to buy a home? Your kids are going to be growing already. So buy that home now if you're financially capable and start making those memories. In addition, let's assume you actually had the full 20% for a $300,000 home purchase. Instead of sinking that full $60,000 into that home for the next 30 years, let's assume you just put 5% down, the minimum. And so that's 15 grand. And you took the remaining 45,000 and you put it into an investment vehicle that returned you 6% every year for the next 30 years. Well, that would have returned you $258,457. Alternatively, if you had decided to sink that full 20% $60,000 payment for the next 30 years for that $300,000 home purchase at an interest rate of 6%. Over the entire lifetime of that loan, you would have still paid a total interest payment of $278,012. So it's your choice. Sink that full 20% and lose $278,000, or put in the minimum 5%, take the remaining 15% and go invest it in something that's going to bring you actual money back in the future. So hopefully the talking points I've made in this video helps you to decide for yourself whether or not the advice of having 20% down for your home purchase makes sense for you or not. And feel free to drop it in the comments. I'd like to hear what you think about this. So if you made it to this video, you are at the end. Thank you so much for watching. I really appreciate you. And if you appreciate the value and the content that I'm putting out, please hit the subscribe, the like, and the bell notification to be notified of future videos just like this one. I will see you in the next video. Thank you again for watching.